Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, November 3rd, 2021. Well, the Fed had their meeting. The Fed announced their findings of that meeting. And then the Fed chair had his conference. And as I talked about last night, the market was either going to accept it and embrace it and love it, or they're going to hate it. It was the latter. They decided to love it, and they pushed this market. And when it jumped to new all-time highs, it seemed to have dropped into a black hole because there were no sellers, but there were lots of buyers. And so they had to search and really go on a hunt for sellers and value. And that, of course, pushed the S&P right up into the resistance zone. It was reluctant, but it did get up there at 46.57, I think it got to, with that ultimate high that we had previously at 45.60. Well, what all of this has done, and the lack of sellers, they did not show up, not with any strength and not with any intensity, did the sellers show up after all of this took place and that news conference came out. So total lack of sellers here and there. And so what it really starts to look like, it's turning into a pretty nasty short squeeze. Now that we're up above levels that I believe a lot of people didn't think the market could reach. And now the market is making appearances that it can go higher still. So I've taken a step back, as I often do. I'm not changing the overall structure. I still believe it's an intermediate degree, irregular B wave. And now that we basically have gotten just below 46.60, which was my upside target, I've taken an additional look at how I'm counting this C wave out. Now, remember, it's a minor C wave. Within that minor C wave, there are 5 waves of minute degree. And what I had to do is change that count. So it's still a minute level, but it's minute 1, minute 2, and then minute 3 ended at today's high. So I've recounted all of the internals for this third wave. And instead of it being here with the minute 4 here and putting this whole thing into the minute 5, it didn't make sense, because the degree that I would have to continue to count it just really gets down to a sub level. So that just suggests to me, it tells me, go back and review your minute level count and then your sub-minute level count. So it is a very extended third wave. It is a glorious third wave in terms of Elliott and how Elliott has described them and what happens inside of them. And even as I was saying in last night's update, that within the S&P, I'm finding that wave 1 subdivides, wave 3 extends, wave 5 extends. And that's exactly what happened in this particular case, with wave 5 being that truly super extended wave 5 of the 3. So wave 1 broke into its own clean 5. Wave 3 did the same, but it had a nice central, a nice extension in the middle. But wave 5 extended twice, once in the third and then once in the final fifth, inside this sub-minute wave 5, which was up to the minute 3. So I'm looking for a pullback. But with the lack of sellers, you can already see the market now is getting very close to the high that it made earlier. And that high is at 57. And we're now trading at 56. So God bless them that the market actually in the S&P is still a quarter, 1 tick apart. That's commendable. Because the only thing that I can really assume is that you've got traders that'll come in and they'll buy some and then just offer them out higher, knowing that the lack of will force this, will fill the orders. In any case, here's what I'm thinking. I would like to see a pullback, and that would be in a minute 4. Now, the S&P really can drop if it needed to, if it was going to. It should find its first support for this fourth wave back down here at 46.13. Now, the lack of sellers ain't going to take the market down to 46.13. So it presents a very challenging front, a very challenging picture that I'm going to take this all the way down to a 15-minute chart so we can see that small little red right there. That could be it. In fact, that is because it didn't come any lower. If that's the 4, this market is in not trouble. It's just going to inch its way higher. So the point is that, in my opinion, with the lack of sellers, the market will just continue to walk itself higher as buyers have to get filled. And it could just turn into a nasty short squeeze. So this is why I'm bringing this up, because as day traders, we rely on being able to buy and sell. As long as the market stays within the current spread, which is a tick, in the S&P, we're okay. But I still need to see some sellers come in so that we can get a fourth wave in and clear the decks for a minute 5. So I'm looking for a minute 4. Minimum, it would actually, I would be expecting it to come back here to the area of the previous fourth of 1 lesser degree, and that's right here. So if it can't, what's that tell us? It's like, holy schmoly. We're getting very, very, very shallow. That might be it. Pullbacks. And if I have to label that as a minute 4, minute 5 has got a lot of room to run. So that's the conundrum right now. I think we need a pullback. The market is extremely overbought, but that doesn't mean it's going to stop. Again, this can sit square as flat as a pancake right at current levels, or right up at 100 for that matter. And the market will still go up if indeed a strong enough short squeeze without any sellers. If we can't find a reason to sell, then this is what I'm going to look for. And that may happen overnight until the Asian markets open and until then Europe opens and everybody's got reasons to interact in the market. Once we reopen and the individual stocks start to trade, well, then I think we'll get our moves. So we may have to wait, but I am looking for a pullback. And I would like to see that it comes a little bit deeper than 46.49, which is all we've gotten thus far. After that gigantic rally, and it got up to 46.57, it only came down to 46.49 before it started up again. So be aware. Once we get that in, and now I would expect it to be shallow because the intensity and the necessity that people need to be long is still there. So again, depending what happens in the component stocks, what happens with the dollar, what happens with et cetera, as this all filters through, we'll get a cleaner picture as to what the market's going to want to or have to do. We continue to have upside resistance, but now it's at 46.65. That's the next zone. So it's just gone up $5 from where it was at 46.60. Then our next level up is going to be 46.9775, or basically 4700. Now, is that a reality? I don't know. We haven't been there yet, but is it a possibility and a strong possibility? Yes, it is. Because I'm just thinking this is just completing the third wave. And I still have a 4 and a 5 to go. And wave 5, if wave 3 went, I have it written down, 872 points, NASDAQ points was wave 3. Then wave 5, well, it could get up to 4,700 from here and still be less than 872 points. So yes, I still believe there's upside, and that's the target now. And we'll take it as it comes. So in other words, it's like, this is what I'm seeing right now. I'm not seeing sellers, I'm only seeing buyers. And that may last. And that may go right through until we get all the news. We have jobless claims tomorrow. We have the employment situation numbers on Friday. Friday's also an expiration. And let me tell you what came to life in the last hour and got pushed up $40. And that was Tesla. And they're now still in there buying. You can see they're still trading it high. And so where's this thing I think could go? 1,300. It has a fair weighting here in the S&P, as does Amazon, as does Apple, as does Google, as does Facebook. So wherever this hits, and Microsoft, if they come after these, then it will get there. This market can rally and it can go up an additional $35 or $45 easily. But there's a possibility that maybe just wave 3 is not done yet, and it'll go to 46.65 and then pull back. And that still doesn't change the level, but it might just make it a lot, it won't make it that deep. This would still be the fourth wave of one lesser degree. Unless they can get it up to 64, and that leaves this as a fourth wave of one lesser degree. So yet to be seen. Trade smart. The moving averages are going to continue. We got an hourly chart which all the moving averages are pointing higher. The 20, the 50, the 200 triangle. That speaks volumes. That's the hourly. The daily is going to be even higher, folks. So again, this is our signs of weakness in the market, is when it starts to come down and it starts to break those moving averages. Now it kind of did, but now it's up here. That was earlier today. Kind of did, and then they just rallied and held it. And now, look, on that daily, the 4, excuse me, is at 46.35. The 8's at 4,600. So it can go. As higher these get, I think the faster it can fall. And we'll get the signals that the weakness is back in the market. Right now, there isn't any. So don't be fooled that weakness has returned. It has not. And we're going to be looking at the daily to start to give us that signal. We don't have it yet. Even, all the market, they're not showing it yet. So we need to be very careful as we trade up into these areas and thinking that we're high enough and we should get a pullback. That may still be the feeling, but that doesn't mean it's going to happen. Trade smart, trade with the moving averages. Do not, as I put in the comments, there's an old saying, never short a dull market. That is so important to remember today. The last half hour to 45 minutes of this market was slow, but was steady, just climb higher. Pull back a few ticks, climb, pull back a little bit, climb. There wasn't any major selling. And when they did, there were enough day traders or other types of traders that took advantage of like any weakness to step in and cover or just buy. So the demand for sellers is pretty high right now. So trade smart. Use your moving averages. Use the Elliott. Use the Fibonacci extensions. And the next update will be Thursday the 4th.